So I'm Stacy Hardacre. Most of you know me, but the ones that don't, I'm in the escrow office upstairs here in Southgate, and I have the pleasure of representing Castlehead Escrow and you guys with your escrows. So thank you for everything and all of your support throughout the years. So today I thought I would touch on the 593s. That is the form that the sellers complete for us to determine if the franchise tax board is going to be owed any money at the close of escrow. As you both all know, that the franchise tax board for investment properties will require escrow to pay a 3.33% of the sales price for properties that are non-owner occupied. Even if they're vacant and have been vacant, if it's not their primary residence and they're selling it, then a franchise tax board will be required. So I thought I would touch on the difference between the different properties. I did just close a 3-unit, and the sellers lived in one of the units, and then the sellers also were getting a divorce. So there was a lot of 593s that had to be done on this one. So I thought that I would use this as my perfect example so that so you can see what the difference are and what is required on our end. So, okay, so ready. So we'll start with the husband and wife. Okay, so this is just your basic 593 form for husband and wife for 1 unit. I'm sorry, for the 3 units. Hold on, this is not the right one. Okay, so this is for the husband and wife who have 3 units and they live in one of, they don't live any of the units. So basically then there's no exemption on this. So basically then box number 12 would be checked. And then I would go ahead and pay the 3.33 finance to the finance tax board. And at the close of escrow along with this form. And then at the time that you do your taxes, you will be able to have a credit with the franchise tax board, and then your tax advisor would be able to advise how much of that money you would get back, if not all of it. And so if you check box number 12, they don't live on the property, they haven't occupied any of the units within 5 years, then this exemption, there's no exemption. So then the franchise tax board is owed for this one. And then, so again, you just check box number 12, and then they'll sign page number 3. Right here, down on the bottom. And then I'll check the appropriate boxes back here when we go to close escrow. So that is just a straight investment property 593 form with units, or even if it's not units and it's only a single family, but it's still a rental. And again, even if it's vacant and you own the property, say you had it in a trust, you acquired it from a trust as a successor trustee, and then you put the property into your name through an affidavit of death. And by doing that, now that property is your property. And since you didn't own it when you go to sell it, or I'm sorry, didn't live in it when you go to sell it, then the franchise tax board will apply. If you keep it in the trust and they sell it under the trust, then they can check box number 2, where it states that the seller used the property as the seller's principal residence. So that would apply for a successor trustee if they lived in the property. So kind of touchy when you have a death with the trustee on making sure that you find out exactly what they want to do with that property before they start transferring title over to people, because it can cause, a financial burden through close of escrow, which, we don't want to have those. So if you can avoid it, then definitely ask their accountant, or you can run the scenario past me. I can see if I can help out. We usually don't give advice on these, but if it's a simple question, of course, I'm able to answer those. So, okay, so we're going to go on to the next one. And this is the one where it's actually just a single family. Oh no, I'm sorry. They live in the front unit. I'm sorry. So they live in unit number A. So they've taken 50% of the 3 units, and they've applied the 50% right here. Okay. Okay, sorry about that. Needed people in. Okay, so it's the 3 units still. They live in the front unit, and for all 3 units, for the 100%, they've given 50% for the unit that they are living in, and then 25% to the other 2 units. So, so this 593 form for the unit that they live in will show 50%, or however they want to determine the percentages. They can have their account help them with that as well. I'm just going off of just basic. So it shows that they own 50% of this unit, and they live in this unit. So they check box number 1, go to page number 3, sign it, and we're good to go. Okay, so now let's say that your husband and wife are getting a divorce. So now we need to split the units and the home. And we're going to need to do 2 593s for each one of them. So Mr. Now, he and his wife originally, when they were married, took 50% for unit A. So now on that 50%, they're each taking 50% of that. So now they are only have 25% interest on the property that they were living in. So that is where you'll put the 25% over here of the second of their primary. Nothing will be owed on this. So again, you're going to go to page 3, and then you're going to have them sign that, and then we're good. Now, when you get into the other 2 units, so as you can see down here, now we are working with unit B and C. So again, for the units, they claimed 50%. So now they're splitting that. So now it's another 25%. So now the whole property, Mr. has 50% in the front unit that they lived in, and then the 2 units that were rented. Now, because they were rented, Franchise Tax Board is due for this. Now you're going to check box number 12, or they will. And then we are going to take the sales price, divide it by 25%, and then times it by 3.33. And that is what the seller will pay for the Franchise Tax Board at the close of escrow. So there'll be 2 593s for each seller, one with just the plain front unit and the other with unit B and C. And then Mrs. will be the same. So now Mrs., she has her 25% of her front unit, box number 1 checked, and there's no Franchise Tax Board due. And we're going to go back down, and we are going to see the Okay, so now we have the second one for unit B and C. And here is 25%. Now she's claiming her full 50% of the property through the 593s. And here, of course, she's going to check box number 12. And then I am going to pay 3.33% of the 25% of the total consideration of the property. And then that's what we will pay at the close of escrow. It'll be itemized on the closing statement, what the percentage is that will be paid, and also, you know, which party is paying the fee. So when you have units and they live in one of them, you know, it's kind of hard for us to determine for them what the you know, the percentage of each unit will be. So I just usually say go based off the size of the units. So if you have a 3-bedroom in the front unit and you have 2 1-bedrooms in the back unit, that's how, you know, I would determine the 50-50, 50 for the front unit, 50 for the other 2, because the front unit is much bigger. So, and again, I usually don't do those or advise on them. I will normally just go ahead and, you know, give them scenarios, and then it's up to them to go ahead and determine how they want to do those splits. So, and there's times when one of the spouses might just say, I'm not taking any of it, and give 100% to the other party. So, you know, that also is something that, you know, just take under consideration as well, because if that's the case, then of course, we only really need to do the 593s for him and not so much for her, or vice versa. So does anybody have any questions? So chat box.
No, not yet.
Nothing. Morning. Okay, let me get out of these. Yeah, okay, so going over each one of the questions. So again, as I stated, you know, box number 1, the property qualifies as the seller's primary residence, principal residence under our IRS section 121. Now, basically before it was if they lived there within the past 2 to 5 years. Now it doesn't matter if it's their primary residence, if they bought it and are turning around and selling it within 6 months, a year, whichever, they will not have to pay as long as it was their primary residence. So, so it no longer has to be within that 2 to 5 years. So if they live on the property, then they check box number 1, and that's it. I don't school these. You know, I compare them with the statement of information just to make sure that the paperwork is correct. But other than that, if they check that box and it shows that they've lived on that property on their statement of information, then there's no franchise tax board that is paid. Box number 2, as I had mentioned, this is when the seller has passed and you're selling the property and they lived in the property. They use it as their primary residence. So then box number 2 will get checked, and then we will not be paying anything for franchise tax board on that one either. And both of those, the accountants will determine what you'll pay when you file the taxes for the sale of the property. Next, box number 3. So this is if the seller claims that they have a loss or 0 gain or a small gain on the property. And if they check that box, then there's a form on page 2 and 3 that will need to be completed. So it gives the information, or it asks for the information for the when they purchase the property. So what they're selling the property for, what these expenses are, what the closing costs are for the sale. What did, and then subtract those. And then item 16, what did they purchase the property for? And you're just going to kind of go through and just put in the numbers. There's a place here for, if there was a depreciation or cost of improvements, you might have put in a lot of money improving the property and maybe only getting like $20,000 back. So you're going to want to put that amount right there. And then as you do the math and go down, you might have a zero gain or a smaller gain. So if you have a smaller gain, then we can go into page 3 and you can do the alternative withholding, which is B. And then it's only 12.3 of whatever the gain is. So say the gain is 20,000, it's going to be 12.3 of that 20,000. So it won't be the full 3.33%. And an accountant or CPA should be able to help them with this. Or if, they can do the math, if they have the closing statement from when they bought it and from an estimate from when they're selling it, so they could fill this out. So that's what box number 3 is for. 4 and 5. Let's see, 4 and 5 don't really apply to us because this is, these are just, let's see, I'm sorry. 4, I've never actually had to use number 4, and same with number 5. I've never had the a property that's ever checked on that one. Item number 6, though, if they own the property as a corporation, an LLC, a limited partnership, at one of those types of entity, then they would check box number 6, and then it doesn't apply. So it doesn't apply to like investors who hold properties in their say a corporation, then it does not apply. Same with item number 7, partnership, LLC, something of that sort. So they will be exempt from that as well. Seller is a tax exempt entity under California law. That would be pretty much like for a priest or a non-exempt person. And that non-exempt person is would be like maybe somebody in politics or something. I'm really not sure how, they'd have to show, of course, the exemption papers that they don't have to pay them, a church, something of that sort. So pastors. So, and then number 9, an insurance company, retirement account qualifies, pension, charitable, remainder trust. I have not had the use of this one either. I haven't had anything of this sort ever come up before. I've never had to sell as an insurance company being my seller. So that would be special circumstances as the other ones would. So then if you want to go down to item number 10, item number 10 is for a 1031 exchange. So if the seller is going to be doing a exchange, then we would just check box number 10. All the funds go to the accommodator when you have an exchange. The money doesn't touch the seller's hands, and therefore then they are exempt from having to pay that franchise tax board because they're going to turn around and buy another piece of property with those funds. But the accommodator is the one who's going to be depositing those funds into escrow. So escrow ties in with that accommodator, and we facilitate their funds to be wired to us. And the buyers just sign their papers, and the sellers just look for a new property to purchase. So they have 45 days to name it after the close of escrow and 180 days to close it. And then item number 11 is, so this is a tricky one. I completely recommend not doing this. So if the seller owes franchise tax board but doesn't have the money to pay it. There is an option where the buyer can pay it if the seller is doing a carryback per se, and the installments for franchise tax board are included within that installment, those payments every month. So part of the payment is going to go to the seller and part of the payment is going to go to the franchise tax board, but it's up to the buyer to keep track of that. So it's not a good thing to do because it can become quite a lengthy time that they have to keep all of this in order. So I seriously suggest against this. But of course, you know, when situations get kind of desperate, you know, sometimes they'll go ahead and agree to these. But I wouldn't put a buyer in that position. So, and then of course, number 12, the non-exemption, if nothing applies, they're not doing a 1031, they rent the property out, they're not going to buy anything else, then they check box number 12, they're cashing out, I pay franchise tax board, and then the accountant will determine how much of that funds will come back after the close of escrow. So again, this section is used only if the seller is going to declare that he has a loss on the property or has a zero gain or a small gain. So, and of course, like I said, their accountant can help them with this. 9 out of 10 times they can get it down to a 0. So always an advantage to be able to get that down so that we don't have to pay it at the close of escrow. These boxes on page 3 are pretty much just stuff that I complete. So the escrow number, of course, is on there, the date that we close escrow, and then I would put in, so back here is where my 593, the page 1 comes in. So if I'm only paying the 25%, so say our sales price is 500 and it's only 25% of 500. So we have, what's that? 1250. The balance, the 12 go of, I'm sorry, the 25% goes on item number 33, and then the amount held of that percentage is what goes in item number 34. So, but I complete this section here, but I will provide a copy to the sellers at the close of escrow with it being fully completed. So, does anyone have any questions?
Very thorough so far.
No. So if you're going to do a loss, guys, you can do the numbers and whatnot here, and you know they are signing under penalty of perjury, but I don't have to have proof of it, and this only goes to the franchise tax board when you know what really matters is when they file their taxes. So but I don't ask for proof of any of this stuff. So if they no paper trail, no paper trail, nothing. I don't ask for that. If you're selling for 500, you bought for 250, and you say you have 200,000 in improvements, then you have 200,000 in improvements. And if it zeroes out, it zeroes out. I just make sure the math goes right. I don't determine or school how much of what gets paid through where. So, and again, I don't ask for a paper trail of any of this. So does anybody else have any other questions? Open.
Stacy, you mentioned that they no longer have to be 2 years. When did that change?
It changed after the first of this year.
So essentially, somebody could buy as their primary residence and then a couple months later sell it, and they won't get charged a capital gain.
Correct.
Wow. Okay, that's great.
Yeah, I know, right? It's been really a good thing that that came about, because a lot more people now that if they bought and want to turn around and sell, say they bought high and they just can't afford it, and so they turn around and sell it, and so they don't get hit with that charge. So it's pretty great that they did that. So okay.
So one more follow up to that: would they have to have purchased it before the first, or that didn't matter?
I'm sorry, what?
Would they have to have purchased it after the first, or that didn't matter?
It doesn't matter. It doesn't matter. Um it's just how it is now. So we don't school it. So if that's what comes in on my documents, then that's what I honor. If the buyer is doing a 1031 exchange but wants to keep 50,000, what would they fill out? That would be put in item number on page. Okay, item number 35. They would check the boot box. They would still check the box for the 1031 on page 1, but then they're going to check a boot box, and then it'll see on number 33, sales price or boot amount. Then they'd put that 50,000 right there if they wanted that. And then so again on the 593s for franchise tax board withholding, as long as it's their principal residence, they live on the property, they have on their statement of information that it's their primary residence, I do not withhold franchise tax board at all. Any other questions?
Well, does the 250,000 rule still apply though?
That I don't, the capital gain, I don't determine that. That's part of what the accountant will do when they do their final, when they do the taxes. Yeah, when they do the taxes for the sale of the property. So I told her about that.
Well, Carlos brought up a good point right now about we're not CPAs. So, I mean, this is just for, I guess I would say general knowledge.
Yeah, this is all just for
advise your clients to check with their CPAs.
Exactly. So this is just, this is all just a kind of FYI for you guys. I mean, it's, knowledge is power. So to kind of know what these are so that they don't freak out when they see them. And also I am always available to speak to anybody that has any of my documents. I actually would prefer them to call me so I could go over them with them. And then I refer them to their accountant if they have additional questions that is over me. So, but yes, no, we're not licensed CPA. This is just all for you guys just to know for your own information. I would never have you guys sit down and try to explain all of this to someone. I'm just trying to explain it to you so that you guys kind of understand the difference, especially when it comes to units. So, and that's the reason why I use units as an example today, because of the fact that when you use units, then you have multiple 593s that are going to get, get asked for, and that we're going to need to provide to franchise tax board as well. So, and in California, I only know California law. I don't know any outside states as far as franchise tax board withholdings. Any other questions? Okay. One other thing I wanted to just to touch on is trusts. So when let me just get out these. When we get a trust, when you guys get a listing and there's a trust, ask for a copy of it. I mean, we don't need the whole thing, because I know they usually have a box that's, I mean, a book that's like has that, the general power of attorney, the will, and all that other stuff is in it. But if you guys can get a copy of it, just to make sure that there isn't any other entities within that trust that need to be contacted, especially if it's a successor trustee, then title is going to need to have that trust, because they need to make sure that the trust and the successor trustees that are signing are the same. And also the trust will also provide the siblings and the other heirs that are to be named within that trust as well. So title is going to want to make sure that either all the money is going to go to an attorney who's going to handle it and disperse accordingly, or I have an amendment that I'm going to disperse. And then I can disperse all of the proceeds to the entities of the trust. If there is an account that is named in the trust itself, then we can wire all the funds into the trust itself. Also, remember, when we have a successor trustee, that deceased trustee, their social security number is no longer valid. So you're going to need to contact the IRS and get a tax ID number. You can do it online. It's pretty quick, but we will need to have that prior to closing escrow, because we have to file that tax ID number with the 1099. So, so with trusts, you know, it's really great to have a copy of the trust, just to make sure that we know that all the people that are within it are parties. And then we will do a trust search, which I will provide with my escrow documents. But remember to just really get a copy of that trust, get a statement of information, get a loan information sheet. And when you go to open escrow, or even before, when you get the listing, if you want, I can order payoffs, I can clear SIs, we get the prelim and clear whatever we need to with the prelims. So if you add those documents in with your listing appointments, you will save a lot of trouble by doing your due diligence to make sure that we check everything up front, so that when we go under contract, there's no surprises. I did have one that I'm working on right now with another office, and he did not order the prelim up front, and there's a less pendants on the property from the previous lender who sold the property, but had a less pendants and a judgment on it. So now they've sold the loan, but I'm still having to go back to that bank to get a less pendants removal, and we can't close anything when there's a less pendants on the property. That stops everything. I mean, that's a big giant halt right there. But there's also a judgment. If there was just the judgment, we could probably close with an indemnity agreement and holding some funds. But because of the less pendants, we can't move forward. And if we would have ordered that prelim when the listing was taken, I could have taken care of that already, and we would be ready to close on Friday like we're scheduled. And now the bank is telling me it's going to take about 30 days, which is going to go outside of our buyer's rate lock. So really important, guys, to get those prelims ordered up front, so we can take care of all of that, all of those issues. Same with the city reports, same file. City report wasn't ordered. It got rejected because of an e-signature. E-signatures are great, and they will take them sometimes, but you will take that chance of it being rejected. And in this case, they did reject it. And so once it gets re-uploaded, they start the timeline all over again, which is another 15 days. And we all know Berkshire doesn't like to close without those. So, so yeah, if you've got a listing, guys, you know, come and see me. Come and let me know that you have this listing here and you need to get the city report done, and let me help you get that done. So when you go under contract, it's already done, and you can hand it over to the buyer, and along with, you know, a 9A report or anything like that. So real important on those, guys. And but the trusts, yeah, please, if you have a trust, especially if it's a successor trustee, you definitely want to make sure that you get a copy of that trust, so we can get it up to title for them to review it, to make sure that that all of our ducks are in a line when we go under contract, because we don't want anything to hiccup while we're trying to close an escrow and, you know, possibly delay us or cause the buyer a hardship on their loan or something of that sort. So real important on those things. And also if just for, you know, even for myself and even other escrows, if you're not using me, and I hope that you all are, but if in the event that you are somewhere else, make sure when you are opening up your escrows that you let us know if your properties are units, because if they're units, then we can do these 593s up front instead of waiting for me to get the paperwork back with the rent statement. Then I know what, you know, what we have, and I'll know how to do with the 593s then. But if you let us know up front, then we can prepare the 593s correctly the first time around. So so be open about those. And does anybody have any other questions? Okay, well, if there's any other subjects that you guys would ever like me to touch bases on, or if you would like to come up and see me and do a one-on-one, I am available. Just let me know, and I will, I'll save some time aside for you. But yeah, right now where it's kind of slow, it's the best time to take advantage of learning. And even I've been doing this for 36 years, guys, and I learn every day. I'm learning something new. And if I don't, it is not a successful day for me. So so guys, come and pick my brain and come and use me as much as you can. So I have a lot of knowledge, and I would love to hear yours as well. Like I said, I love to learn something new every day. So God bless you all. Thank you so much for letting me take over this meeting, and I wish you all many blessings. So thank you.
Question.
Yeah.
For power of attorneys.
Power of attorney.
Yeah. Do we need a special type of POA?
Yeah. So for a specific, so power of attorney. So good question, actually, very good question. Power of attorneys, if you have a trust, there's a general power of attorney that will be inside of that trust, which is great. It helps with finances. It helps with decision making for, you know, for medical reasons and stuff. What it does not do is allow you to buy and sell property. When you are selling a property under of a power of attorney, it must be a specific power of attorney. And the specific power of attorney states that the power of attorney is being used specifically for the sale or purchase of this property. And then it gets signed and notarized by the person who's giving the power of attorney. The general power of attorneys don't cover real estate. So if you are going to do a power of attorney and you need that, guys, if you know this when you're getting your listing, let me know. I'll get that out to them as soon as possible. Then once that is signed, then the power of attorney can sign everything that is it is handed to them at that time. So it's really great to go ahead and you know, let me know, or your escrow person know up front, that there is going to be a power of attorney involved, and then we can put the proper verbiages on the signature line as well. So so yeah, power of attorneys, again, any questions on those, you know, let me know. If you need one, let me know, and I can help you with that as well. And yeah, any other things that you guys would like to touch bases on with me, or touch base with you guys to give you other classes, please let me know, and I will be more than happy to you know, reach out or sit with you guys or whatever you need. So I am here for you. So if there's anything that anybody needs, please feel free to come and see me, give me a call, shoot me an email. Most of you have my cell phone number, but I will put it in the chat right now. So if anybody needs something on the weekends, have a question or whatnot, you can shoot me a text, or you can shoot me or shoot me a phone call, whichever. So I don't have access to my work emails here during the weekends. So so yeah, send me a text if you guys have any questions on anything. So anything else you can think of, boss?
So when it comes to the POA, how can we, as an agent, know which is good, if it's valuable when we take the listing?
Well, because so he's asking how are you going to know if it's going to be a good power of attorney, and that's in the trust. So the power of attorneys that are in the trust, again, like I said, we'll say general power of attorney, and so if it just says general, then and it doesn't mention anything about real estate, then that is not going to work. If it does mention something about real estate, shoot it to Sonia and have them look it over. Yeah, you can shoot it to Sonia, you can shoot it to me, I can send it to John Fernando, our title officer. He's the top dog at Orange Coast, and I can send it to him to review it. And then if not, then of course we can just do the specific. And the specific is a one-page document and then an amendment that they sign, just detailing the reason why we need the power of attorney. It could be out of state, leaving the country, whichever. So but if it's incapacitated, then that's a whole nother one. That's a whole nother ball game. So if they are not of sane minds or signing with a check mark or something like that, then we need 2 doctor's notes to tell us exactly what the state of that person is. So, and that'll also all be within the general power of attorney, which we could use for general information as well. So anything else? Okay, so I shot the office number and my cell phone number in the chat. So all of you that need it or would like it, that don't have it, please feel free to save it and use it as you need. Like I said, I know you guys are here weekends and working all over the place on the weekends. So, so please feel free to use that to contact me if you have questions that you need immediately. If you need help with an estimate, also feel free to reach out to me. If it's a weekend and you need to do one like desperately, call me and I'll walk you through it. Orange Coast has a great one that you can do. It's very self-explanatory, really super easy to use. So yeah, so take advantage of all of that in this information as well. And anything else that you guys need, I'm here for you. So anything else, Freddie? All right, guys, thank you so much. God bless you. I'm praying for you all. Love you all.
Hello, I'm back. All right, folks. Well, that's our Escrow 101 with Stacy Hardacre. She's our escrow officer for the Southgate office here. She's upstairs, located in the 2nd floor. And again, like she was saying, any questions you guys have about your escrows or anything else, again, regardless who you guys actually have your escrow open with, feel free to, feel free to give her a call for any questions you might have. But again, it's very crucial to understand, when it comes to the escrow, they are the neutral party. Okay, when it comes to opening a transaction, and also just on the point of sight of the real estate point of view, keep in mind that escrow doesn't need to be open for an offer to get accepted. Okay, keep that in mind, because a lot of people think, well, I never open escrow, so my days do not start. No, again, the days of the beginning will start the day after acceptance. Okay, pretty much escrow follows the binding contract, the offer, pretty much. Okay, so whatever it says on the binding contract, on the RPA, on the commercial, whatever, keep in mind escrow follows that. Again, knock on wood, if we ever get sued for any possible litigations, the judge doesn't want to see the escrow instructions. They want to see the purchase contract. Okay, I'm just giving you a little tip for you guys to understand. Okay, everything is what is done on the RPA, the CPA, any purchase contract, again, binding contract, is what the court wants to see at the time of the actual court hearing. So escrow can be open the same day and closed the same day as well. So keep that in mind. If you never open escrow, or escrow opens, the week after, again, your days still are moving forward on the purchase contract. Any questions on that? Because there's a lot of misunderstandings when it comes to the escrow, that, well, I never open escrow, so my days never start. I shouldn't bring any money to the escrow, or my earnest money deposit. You guys clear with that? We're good? Yes? All right. Okay. So again, please, anything else you guys have, please reach out to us. Let us know. Today's it's gonna be a short class, 1 hour class. and then we'll continue bringing you guys more valuable information when it comes to the life of the escrow, title, home inspectors, termite. And if you guys wanna have any suggestions, please feel free to reach out to Eddie or to myself. And anything else may have in mind, maybe questions or concerns, but anything else you are dealing with. Again, if you want to know about a title, we will definitely bring a title person. Home warranty, what they cover. When keep in mind when it comes to home warranties, there's a lot of coverages that are actually already included on the package when you order the home warranty for your clients for the buyers. But you might need to add additional options when it comes to the coverages. Maybe that coverage that tier of coverage that you have selected, maybe it doesn't cover appliances, maybe it doesn't cover the roof, maybe it doesn't cover something else. So you got to be very careful and read, okay, what are the coverages that are included in the home warranty, because not all of them are the same. Okay, again, sometimes they're a la carte, and sometimes they are like,
buenas tardes. No, buenos días.
Buenos días, Eva, ¿cómo está?
okay, and sometimes you gotta pick and choose and add more additional options for those coverages. That's in your home warranty. Okay. Now, I know Gloria Navarro from Old Republic has come into the Downey and the Southgate office to give us different brochures, and I believe I have one here. I'm not sure. No, I don't have one here. But again, feel free to go through that brochure. Go through it. There's different packages. Okay. Yeah. The higher the package, the higher the coverage, and the higher the cost. So keep that in mind. What else? Termite. Again, termite. Now we know that the market, it is changing. It's shifting. Again, it's getting more stable, right? It's getting more flat. So before, when 90 days ago, yes, it was a not very normal market, abnormal market. But again, now buyers are getting more choices when it comes to getting an offer accepted, maybe asking for closing costs, asking for a termite, asking for repairs, asking for, asking for a low price offer, and so many things. So I am going to be the actual speaker for Thursday when it comes to corporate, and I'll be speaking more about the actual change of the market. So with all that being said, I want to actually end our meeting for today. Unless there's any other questions you guys actually want to unmute yourself, I'll put it in the chat box. Please feel free. If not, then I'll let you guys go and go on with your day, be productive. And I guess that's it, right? We're good. All right. So
Tomorrow, Wednesday,
our Southgate office has office meetings. So Naomi, Brenda, Rena, Micaela, let's see, Mireya, who else is here with us? Carlos, Freddy, Jasenia, and Alianis are here with us. So please don't forget to come tomorrow. Be on time. 10 o'clock at the Southgate office. All right, folks. Well, thank you for your time. I appreciate you guys. Be productive. Any questions you guys have,